AMD is a pattern of price behavior. A. Accumulation. M. Manipulation. D. Distribution. That is, we have accumulation, manipulation, and distribution. This price behavior is traced within the day, within the week, within the month, and even within the year. That is, we have some accumulation, manipulation at the beginning of the period that we have chosen. It will be a day, it will be a week, it will be a month. The logic of the session can also be applied to the AMD pattern. For example, how during the Asian session, the price is consolidated, during the London session, at the opening of the day, at the true opening of the day, manipulation occurs and a true movement is generated. And during the New York session, the price is impulsive and goes to the goal of today, continuing the true movement. For example, schematic example of the AMD pattern. That is, we have some consolidation in the form of accumulation, we have some manipulation or false exit from this consolidation, a break, as we see, a rollback, and a true downward movement. That is, this is, by the way, some of the same range with a deviation from the top and a continuation of the downward movement with a deviation from the bottom. But now it's not about that. This is more used in the currency market. And we have some consolidation, manipulation, and distribution. The same in the language sense. We have some accumulation, manipulation, and distribution. For example, we have some currency pair, and during the Asian session we have consolidation. We have some zone, which is called midnight in New York midnight. In fact, midnight in New York, or 7 a.m. in the summer and 8 a.m. in the winter in Moscow, in fact, this zone is the zone of the true opening of the day. And most likely the manipulation will begin from here. That is, a few hours before the opening of London. We will see some rising movement, manipulative rising movement in this example, with the removal of liquidity from Asian maximums. After that, we will see a downward movement, the true one, already during the London session. Here it is all in the form of some kind of structure break. After that, the price rolls back. As we can see, it comes exactly to the New York midnight zone as this horizontal zone is chosen. You open, let's say, a 15-minute time frame, choose a candle, which we have at 7 a.m. in Moscow, or in general, midnight in New York, and choose the opening price. And this zone is very interesting for us. We'll talk about it a little later. And the price continues its true movement to some liquidity pool. And pay attention to how the price continues this movement. That is, we have some movement, rollback, downward impulse, rollback, downward impulse, ineffectiveness overlap, downward impulse, rollback, ineffectiveness overlap. What does this mean? This speaks of the very institutional order flow. That is, this is a true trend movement. Naturally, this is within the day, and it has some purpose. Any institutional order flow has some purpose, after which most likely the market can turn around and create a new institutional order flow. Accordingly, this is why we close positions about some liquidity pools. Judo swing. This is a definition given by ICT. This is a false movement at the opening of the session. The goals of this movement can be different. The first goal is to capture liquidity, that is, to remove liquidity from BSL or SSL. The second goal may be to fill in the ineffectiveness of FWG, that is, ineffectiveness in form of FWG. Judo swing starts at about 0000, that is, midnight in New York, and can last until the opening of London session. There is no exact time period when judo swing is formed. For example, here we have midnight New York. The price removes this maximum, and the true movement is down. That is, this manipulative movement is called judo swing. This is a very common phenomenon in the currency market, in such pairs as Euro USD, GBP USD. You can pay attention to how the price removes liquidity here. But keep in mind that this movement cannot always remove liquidity. It can simply block some FWG and continue its trend movement. The true opening of the day, that is, the true daily open. This is one of the levels that is often tested and can give a reaction. The opening level of the day, week, month, is used by many traders, and the classic level of the opening of the day is the opening of the candle. That is, you open the daily time frame, take the opening of this candle, well, any candle, and you get the opening of the day. This is a classic understanding. But the true opening of the day, which we will use when the algorithm starts its work on price manipulation and delivery, is midnight in New York, or 7 a.m. in Moscow in the summer, or 8 a.m. in the winter. This is what ICT calls for. ICT says that you need to think a little differently. Everything is not just the way we are trying to be provided by exchanges, brokerage companies, and so on. And it argues with all this that the true opening is in non-standard time, the opening of the candle. And you can see for yourself by looking at a lot of graphs. Why is this level needed? It is some kind of reference. If the price is above it, then we plan sales. If the price is below it, then we plan purchases. If the price is below it, then we plan purchases. That is, when we have midnight in New York and the price starts going up, approaching the opening of the London session, we understand that the price is above it. And accordingly, we can plan our deal if the price is above this value. But of course, this is not a mandatory condition. This is not a condition. This is some kind of reference that will help you understand the price action here and now. And as we can see, the price, having just entered this zone, goes further down. Asia box, or some consolidation formed in an Asian session, there is a possibility that the minimum or maximum of the Asian session, with 100% probability, will be filmed during one of the next sessions in London and New York. That is, we have a 100% probability that the maximum or minimum of the Asian session, the keyword "or," will be filmed. It is possible to shoot the scenario of both sides, as you can see in the previous example, when the price removes the liquidity of the maximum of the Asian session first from above and then removes the minimum from below. It is possible to shoot the scenario of the exit from consolidation and the continuation of the trend without removing the opposite side of the consolidation, as for example here. This example was specially given. That is, we have some movement in the Asian session, then at the opening of London, the price rushes up and there is no Judas swing himself who would shoot, let's say, this liquidity of the Asian minimums. Nevertheless, it turns out that we have a New York midnight zone. The price, after the opening of the day, starts some kind of impulsive movement down, comes to this zone. This wick is also a certain tool of ICT, but we will not talk about it. We will talk about the fact that this is an order block on a smaller time frame, after which the price forms some kind of reversal. In what form is the reversal? We see a movement up, FVG, the price covers this FVG, again a movement up, an update of this maximum, the formation of FVG, and this is a confirmation that we may have an ascending stream of orders and accordingly the entrance from this FVG, but the London session has not yet opened, after which we have some movement up, then the price rolls back, covers this ineffective movement, FVG, again a movement up, an update of the maximum, again the price comes and covers the FVG already in the London session, that is here a green box, a green rectangle, and here we can already enter with our foot here and pick up our 2R in the morning and go to rest, let's say, after which the price, when reaching a certain maximum, rolls down, consolidates, rolls down again, and breaks this minimum, which is a break in the structure. Why exactly this swing low and not this swing low? Because for me, in this time frame, this swing low was logically associated with a stream of institutional orders covering this FVG, and accordingly, the break of this minimum is a confirmation of the reversal for me. Accordingly, when the price rolls back to the FVG zone, we can open a position here, a short one, with a foot behind this maximum, after which the price goes down, again updates the structure here, a new trading range, after which the price rolls back during the interval between, let's say, a pause a few hours before the opening of New York and during the lunchtime in the London session, the price simply rolls back, blocks this ineffectiveness, and continues its movement along the trend. Breaks the structure here, again the movement down, rollback, blocking this FVG, again the movement down, and the price comes to New York midnight and 0.5 of this range. That is, 0.5 of this range is often tested and gives some reaction. Here, the time of formation of the Asian range is indicated in New York time and in Moscow in the summer and winter.